John Kunick. I live in the Tulsa, Oklahoma area, and I've been investing with Ashcroft about 4.5 years, and I've done 12 deals in that time frame. I was in the medical device field and had taken, a lot of the money that I was making in the medical device field, and in an attempt to develop a secondary income to eventually unhook my wagon from the corporate, field. I started doing single family houses, and I just got to the point where I had, in my opinion, more than enough single family houses where I didn't want to have any more. And so I said, what else is out there that I can do to continue to take this money, that the cash flow that I'm earning, and reinvest it and make more cash flow? And so I, through a friend of mine, had heard about Ashcroft, and started doing my due diligence on my first deal ever, and decided to take the leap. But it wasn't necessarily anything about multifamily per se, as much as it was just some diversification from the single family housing that I had been doing. I would say, number one, it was very passive, but number two, they seemed to manage their properties like I would manage my properties in Tulsa. So that was very important to me. I didn't want to just go out and buy, a mutual fund or a stock where, you don't really know how they're managing the company. So I did some due diligence about Ashcroft. I didn't actually look at any other syndicators. I really didn't even know what syndication was at the time, but I didn't look at any other syndicators. I feel very lucky that from, the first time that I looked into multifamily, that I had someone that knew about Ashcroft and made me familiar with them. And then when I started doing my due diligence, I was like, I really like this. And then when I submitted my interest in investing, then Joe Fairless called me, and he and I got to talking, and I really felt like he and I hit it off. He also started with single family houses, and so anyway, we talked a lot about how we manage our single family houses and how to manage assets. And I just felt comfortable with that. So I thought, well, I'll do one here and see how that goes. And it certainly was well above expectations. And so I think about 8 months later, I did my second one. I was very involved with my single family houses. I knew exactly what to expect. So just giving up that control, if you will, where, hey, I'm not focusing on who's the tenants are. I'm not focused on what repairs are being done. It was just, I didn't know what to expect. And so, there was a leap of faith, which there is anytime you're doing anything new, there's a leap of faith. And, but that was very quickly, after the first couple months where, I got the distributions, and I'm like, okay, this is panning out as they said it would. Then it was like, okay, I'm ready to consider doing another one. It all starts with, what are the returns? If the returns aren't there, it doesn't matter how much you like everything else, it's not good. So I'd say the best thing so far is the returns have been above expectations. The returns on the 12 deals that I've done so far, they've all met or exceeded expectations. We've only had one deal that has gone through the whole cycle, and that was far above expectations. And the other thing I really like about Ashcroft is the monthly updates that I get. So as Evan will probably tell you, I read them. I read every word of them. And there's sometimes I email Evan and say, hey, this part here didn't make sense because, it's inconsistent with what was communicated last month. And so Evan is good to get back with me and say, yeah, we had a typo or whatever. So anyway, I don't know how many investors actually read those, but they're important to me. I read every single part of them. I'll give you 3 reasons that I've recommended to you guys. And as I've said, I've probably had, 20 to 25 other investors that have invested with Ashcroft based on, my referral. But results, When I've talked to my other friends that have invested, I've told them, look, this is what I'm making with Ashcroft. I've given them very specific examples. Number two, I would say the monthly communications. When I've gone to other friends and said, hey, I know you are looking for other ways to build cash flow. I've shown them not only, hey, here's what I've made, but I've given them examples of those monthly email updates that you guys provide. And I'd say the third is just track record. You can usually predict future performance by looking at what you guys have done in the past. And, for me, it's, when I get a new deal and you say, this is what we think the market's going to be, this is what we think the performance is going to be, I have confidence because I've done, a number of deals, and, there's only been 2 or 3 times where, things have not gone as expected in a negative sense. And, but in each situation, Ashcroft hasn't hidden that. They've come out and said, hey, we had this unexpected storm hit, we had this damage, and, we're dealing with insurance, and, hey, collections are lower than we anticipated for this reason. So, they haven't hidden it, they've divulged it, and they've said, here's our plans to fix it. And then the next month, they give you an update. And so, I'm realistic enough to know that things don't always go the way you expect them to go. But when you have a partner that will say, hey, we've had something unexpected happen, here's what's happened, here's our plan to fix it, and then they update you down the road and say, okay, now, it has been fixed. To me, that gives me a lot of confidence that they're going to continue that in the future. There's 4 ways that I've seen that I've benefited from Ashcroft Capital, and I'm talking just the returns. Okay, so the first one is the month-to-month distributions that you get. So, for example, on my first deal ever, I believe it was 8% cash on cash was, the expected monthly distribution, annualized, 8% annualized. So, I don't think in the 4.5 years that I've been in that deal, I don't think we've ever missed paying a monthly distribution. So that's number one. Number two then is there's the opportunity for special annualized distributions. And I believe on that first one I ever did, at the 12-month period, the 24-month period, et cetera, every annualized period, we've gotten special distributions. And then obviously the next benefit is some tax benefits. So, at the end of the year, you get the K-1, and, it helps to offset gains in other areas. So that definitely has been a benefit. But then, even though we've only had one that we've gone full cycle with, then you've got the opportunity for upside. So upside appreciation. And, I'm looking forward to some of these other deals that I've done going full circle, investing with Ashcroft Capital, as well as, all the other investments that I've done, real estate investments, have allowed me to say, okay, I can unhook my wagon from the corporate industry, and I can, basically have the cash flow that I need to support, my lifestyle. And so that's been very beneficial to me. They've continued to perform, they've continued to communicate, and they've continued to give me confidence that, what they say they do, they will do. Very grateful for the relationship that I've built with Ashcroft. I see Ashcroft as a very important partner, because of Ashcroft partially, and also because of all the other investments that I did. I'm very fortunate to have been able to retire. So yeah, I'm very, very pleased with Ashcroft. And for that reason, I plan to continue to invest with them down the road.